Welcome back to The Explainer, everyone. I'm so excited to have you here today because we are breaking down the post-market data for August 11, 2026. And honestly, if you've been glued to the tickers today, you already know it was a session with a lot of underlying friction. We're not just going to read off the red and green numbers today, we are really going to connect the dots between global shockwaves and your local portfolios. There's so much noise out there right now, but we've organized exactly what you need to know to truly grasp what drove today's market action. Okay, let's dive into this. Here is our roadmap. First, we'll hit the market overview. Then, the geopolitical ripple effect. Third, we'll look at today's top losers. And finally, some special corporate news. Now, before we look at today's closing bells, I want you to think about something. What do the Strait of Hormuz and your stock portfolio actually have in common? I know, it sounds like two completely different worlds, right? One is a massive global shipping choke point thousands of miles away, and the other is, well, your personal financial future. But as we unpack today's data, you'll see exactly how interwoven they really are, and why a single diplomatic roadblock can literally ripple straight into your investments. Keep that in mind as we go. Let's move into Section 1, the market overview. And spoiler alert, it was mildly negative. Now, what's really interesting about this slide is how the major benchmarks reacted to the pressure. The Sensex definitely took a bit of a hit, drifting down about 0.5%, or roughly 0.57%, to land between the 78,096 and 78,187 levels. Then you have the Nifty 50, which kind of just hovered right around 24,583, so mostly flat, maybe slightly weak. But check out the Bank Nifty. It closed down about 0.10% at 57,686. That tells us the banking sector was a pretty noticeable drag on the broader market momentum today. That being said, it wasn't a total sea of red. We actually had a pretty mixed internal market. Out of 24 tracked sectors, 13 still managed to close in positive territory, which points to a market that's cautious, rather than full-blown panicky. But the real star of the resilience story today, that was absolutely the mid-cap segment. While the large-cap heavyweights on the Sensex were pulling back, the mid-caps pushed up, gaining a very solid 0.62%. It's a stark contrast. It shows us investors weren't fleeing the market entirely. They were just rotating away from large-cap vulnerability and finding safe havens in the middle tier. All right, moving into part 2, the geopolitical ripple effect. Let's look at the macro forces. And it all starts with this number right here, $88. Today, Brent crude touched between $87.70 and $88 a barrel. That is a fresh one-week high. Energy prices are the absolute lifeblood of the global economy, and when that number spikes, markets everywhere start calculating the damage. So why exactly did crude surge today? Well, the answer lies in a major impasse in U.S.-Iran negotiations over the Strait of Hormuz. There's a ton of renewed uncertainty about when, or even if, the strait is going to fully reopen for standard commercial transit, so global tensions are flaring right back up. We're looking at a classic supply chain fear. The Strait of Hormuz is one of the most vital arteries for oil on the planet. This diplomatic roadblock is heavily weighing on global market sentiment, and it's translating directly into those price spikes we just saw. Let's move to and see how this builds into a direct threat to Indian markets, kind of like a domino effect. Step 1, you have that geopolitical tension at the strait. Step 2, the fear causes Brent crude to surge to $88. Step 3 is where it really hits home. India is a massive oil importer, so when global oil gets more expensive, the national import bill inflates, and fast. Finally, step 4, those higher operational costs and the resulting inflation lead straight into concerns over corporate earnings. This exact chain reaction right here is why the broader indices, especially those large cap and banking stocks, showed so much caution today. Okay, part 3, today's top losers. Let's see who was feeling the heat. So the crucial point is that the pain was definitely distributed across a few key players. Bharat Forge led the slide, dropping 2.2%. Right behind them, Himadri dipped by 1.5%. Then we have Bajaj Finance dropping 1.1%. And remember, that heavily contributed to the banking softness we talked about earlier. Finally, BSE Limited and Vedanta closed out the list, both down 1.0%. Finally, part 4, special corporate news. Some major market shakeups today. And this brilliantly illustrates how dynamic the market can be. We saw a huge structural shift announced by the National Stock Exchange today regarding the benchmark Nifty 50. Come September 30th, IT giant Wipro is going to be exiting the index. And stepping right up to replace them, BSE Limited. This is a massive shift for index funds and institutional trackers. Even though BSE saw that 1% dip today, their upcoming inclusion is a huge milestone, so definitely keep that date on your radar for the end of next month. We also got some very significant legal news regarding the Adani Group. A U.S. judge officially dismissed a fraud and bribery case that had been brought against Gautam Adani. With that specific hurdle cleared out of the way, market analysts are already noting the potential for some gains in Adani Group stocks as the market digests the news. It's definitely something we'll be watching closely in the coming sessions. So, bringing it all together, today was undeniably a mildly negative session, driven by those crude surges and the global tension. But it wasn't a total washout. That pressure was impressively offset by mid-cap resilience in some truly surprising corporate shifts, like BSE's index inclusion and the Adani Group's legal win. Which leaves us with this final critical question. With global tensions still simmering, is crude oil going to continue dictating the markets tomorrow? Now that you see exactly how a bottleneck at the Strait of Hormuz links directly to corporate earnings and market sentiment, you know exactly what metric to watch when the opening bell rings next. Thank you so much for joining me for this explainer. Keep learning, stay focused, and I will see you next time as we continue to break down the numbers.